Hello and welcome to today's video on Nifty trading setup for 17th of March 2021. And in this video we will be analyzing today's trading day as well as we will be planning for the coming trading sessions. Well, here we have got the Nifty daily chart in front of us, and we can see here that this is the bar that it created on the daily chart for today. It was a small range bound kind of a trading day today. However, important thing is it closed below the 20-day moving average, which is not extremely good sign, and we hope that the market recovers from here and as soon as possible it crosses the 22 moving average on the upside. Well, and now let us just go to look at some of the important data points for today from today's trade. In terms of open interest, 15,200 and 15,300 still has got a really high amount of open interest. So it gives an indication that 15,200 would be a huge resistance for the market to cross in this expiry. Whereas the other point to note is today is the Fed meeting, FOMC meeting. So if there's some positive news coming out of the meeting, the market will cap up, and once 15,200 is crossed, there could be a short covering. So we would have to be careful, especially because of the event which is there today. Well, and then coming to the put side, there's 15,000 which has got a high open interest but only 25,000 open contracts, and then that is followed by 14,800. And in terms of increase in open interest, 15,000 call has seen a increase in open interest of around 8,900 contract, which indicates slight negative bias. And then on the decrease front, 14,800 contracts were written heavily in the Friday session, and that was wounded off in today's trading session. Well, so based on this data point, it seems that 15,200 to 14,800 kind of seems to be the range. Sorry, the range for this expiry. And now in the institutional data front, today FIIs were the net buyers. After 9th of March, it's been a long time since they have bought. So last they bought on 9th of March, and after that only today they have bought for 1,692 crores, and DIs have sold. They have been selling since a long time now. So 1,000 they have sold. And in terms of the open position front of FIIs, the data is still the same. They are having higher puts and they have written more number of calls. At the same time, they are slightly long on the index futures. Overall, they are still long by 57%. And now let us go and check the sectoral indices. How did the sectors perform for today? Bank Nifty 1% down, and the top performing sector for today was Nifty IT again, and then followed by Nifty Pharma, Nifty FMCG, I beg your pardon. And on the downside, Nifty PSU Bank was slightly down. However, important thing to note here is mid cap and small caps were up. So it was only the frontline indices, especially Bank Nifty, which was down today. And more importantly, the India VIX today, though the market fell slightly, India VIX was more than 4% down. It was 5% down in today's trade. So this decline in India VIX indicates consolidation. So we have been consolidating since more than 3 weeks now, and that is the reason why India VIX is so down. Now India VIX is around 20, and this has been the lowest point, lowest range where India VIX has fallen to in the coming few months. After reaching 20, it always bounces back. So we'll have to wait and watch whether it will bounce back again from this level. So this is a really important factor, India VIX, which will we will have to keep an eye on. And then the other point is the max pain is still at 15,000. So so that is the reason why even the max pain indicates consolidation. And on the other hand, today most of the big contributors were down. However, today Asian Paints was more than 4% up today, more than 100 points it was up, and that was the only highlight of today's trading day in terms of the bigger stocks, the Nifty 50 stocks. Now let us just go to the Nifty 15 minutes chart and look where the prices are. Here we go. This is the 15-minute chart, and we can see that Nifty is still range bound. Is been range bound since a long time now, and the range is 15,300 to 14,850. So it's been really volatile within this range. So we expect this range to continue, and if it breaks decisively on one side, then it is a good opportunity. However, since it is at the lower end of the range, we would always be buying as of now with a stop loss just below this level, this range level. Even as per the chart, the range comes to the same. We can safely say that 15,200 would be around here at this level, 14,800. So we can expect the range to be somewhere like this, to 15,200 to 14,850 levels. Okay, so now we discussed about Nifty. We also discussed about India VIX. Let us just go to India VIX chart and see when was India VIX this low. Here we go. Here is the India VIX daily chart, and we can see here that every time it reaches to this level, around this level, it bounces back sharply. And this last downfall has been a continuous downfall. It is coming down with a huge force, so it is likely that it will break this level. And if it starts moving up, we all know what to do. We all know that we'll have to go VIX long. We'll have to do the VIX long strategies if it starts going reversing from here. Okay, so that's all for now. Thank you for watching, and we'll be back again with another videos on Nifty. Thank you.